The ultra-wealthy operate in a completely different financial universe than the rest of us. While you're comparing savings account interest rates, they're using tools that most people don't even know exist. These aren't just bigger versions of what you have access to. These are entirely different systems designed specifically for wealth creation and protection. Today, I'm revealing 10 tools that the rich use to build and keep their wealth. Some of these you can start using immediately. Others require more capital, but understanding them will change how you think about money forever. By the end of this video, you'll see why traditional financial advice keeps people stuck and how the wealthy play an entirely different game. Here's what your bank tells you to do. Open a checking account, get a savings account earning 0.5% interest, maybe invest in some mutual funds, and hope for the best over 30 years. The wealthy laugh at this approach because it's designed to keep you as a customer, not to make you rich. Traditional banks make money by lending out your deposits at higher rates than they pay you. They want you to be a reliable source of cheap capital, not a competitor. That's why they don't tell you about the tools I'm about to share. These tools flip the script and put you in control of your financial destiny. The middle class focuses on earning more income and paying more taxes. The wealthy focus on building assets and minimizing taxes. The middle class saves money in accounts that lose value to inflation. The wealthy use debt strategically to acquire appreciating assets. It's a completely different playbook. The first tool is private banking, and it's nothing like the banking you know. Private banks don't want your paycheck deposits. They want to help you build wealth because wealthy clients are more profitable long-term. Private banking starts around $250,000 in developing countries and $1 million in the United States. But here's what most people don't know. You can access similar services through smaller private banks and credit unions at much lower minimums. Private banking gives you access to preferential loan rates, sometimes 2 to 3% below market rates. They offer investment opportunities not available to regular customers like pre-IPO shares and private placements. Most importantly, they provide comprehensive financial planning that coordinates all your accounts, investments, and tax strategies. The key difference is relationship banking versus transactional banking. Your private banker knows your entire financial picture and proactively brings you opportunities. Regular banks just process your transactions and try to sell you products. The second tool is sophisticated legal structures for asset protection. The wealthy don't just own assets directly. They own them through trusts, limited liability companies, and offshore entities that provide multiple layers of protection. A domestic asset protection trust can shield your wealth from lawsuits, creditors, and even divorce proceedings. These trusts are legal in states like Nevada, Delaware, and South Dakota. You can be the beneficiary of your own trust while protecting the assets from outside claims. Limited liability companies provide operational flexibility and tax benefits. The wealthy often own real estate, businesses, and investments through separate LLCs. This compartmentalizes risk and creates tax optimization opportunities through strategic structuring. For larger wealth, offshore structures add another layer of protection. Countries like the Cayman Islands, British Virgin Islands, and Switzerland offer privacy and asset protection laws that don't exist in the United States. This isn't about hiding money from taxes. It's about protecting wealth from frivolous lawsuits and political instability. The third tool is access to alternative investments that aren't available to regular investors. While you're choosing between stocks and bonds, the wealthy are investing in private equity, hedge funds, real estate syndications, and commodity funds. These alternative investments often have higher returns and lower correlation to stock market volatility. A private equity fund might target 15 to 20% annual returns compared to 7 to 10% for stock market index funds. Real estate syndications can provide monthly cash flow plus appreciation. The traditional barrier has been high minimum investments, often $100,000 to $1 million. But new platforms are democratizing access. Companies like Yield Street, Fundrise, and EquityZen allow smaller investors to participate in deals previously reserved for the ultra-wealthy. The key is understanding that wealthy people diversify beyond traditional assets. They might have 30 to 40% of their portfolio in alternatives, compared to 5 to 10% for typical investors. This diversification reduces risk while potentially increasing returns. The fourth tool is using debt strategically instead of avoiding it completely. You see, the wealthy understand that debt can be a wealth-building tool when used properly. They borrow money at low interest rates to acquire appreciating assets that generate higher returns. Now let's take real estate as the most common example. Instead of saving $500,000 to buy a rental property in cash, they might put down $100,000 and finance the rest. This allows them to control $500,000 worth of real estate with only $100,000 of their own money. If the property appreciates 5% annually, they're earning 25% returns on their invested capital. The wealthy also use securities-based lending, borrowing against their investment portfolios at rates often below 3%. This provides liquidity without triggering taxable events from selling investments. They can access cash while keeping their investments growing. Business debt is another strategic tool. Equipment financing, working capital lines of credit, and SBA loans allow business owners to grow faster than cash flow alone would permit. The key is ensuring the debt generates returns higher than its cost. The fifth tool is sophisticated tax planning that goes far beyond standard deductions. The wealthy use the tax code strategically to minimize their tax burden legally and ethically. Business ownership provides numerous tax advantages. Business expenses, depreciation, and strategic timing of income and deductions can significantly reduce taxable income. Many wealthy individuals structure their affairs to receive income through businesses rather than as employees. Retirement account strategies extend beyond 401ks and IRAs. Self-directed retirement accounts allow investment in real estate, private businesses, and alternative assets within tax-advantaged structures. Backdoor Roth conversions and mega backdoor Roth strategies maximize tax-free growth potential. Charitable giving strategies provide tax benefits while supporting causes they care about. Donor-advised funds, charitable remainder trusts, and private foundations offer tax deductions while maintaining some control over the donated assets. Geographic arbitrage is another strategy. Some wealthy individuals establish residency in states with no income tax like Texas, Florida, or Nevada, while maintaining business operations elsewhere. The sixth tool is family office services that coordinate all aspects of wealth management. Traditional family offices serve families with $100 million or more, but multi-family offices and virtual family offices make similar services accessible at lower wealth levels. Family offices provide comprehensive financial planning, investment management, tax planning, estate planning, and even lifestyle services. They coordinate between your accountant, attorney, investment advisor, and insurance agent to ensure all strategies work together. The key benefit is having a quarterback for your financial team. Instead of managing multiple relationships and hoping they communicate, you have one point of contact coordinating everything. This prevents conflicts between strategies and ensures optimal outcomes. Virtual family offices and multifamily offices can provide similar services, starting around 1 to 5 million in investable assets. They offer economies of scale by serving multiple families while providing personalized attention. The seventh tool is concierge and lifestyle services that provide access and convenience money can't directly buy. These services handle everything from travel planning to event access to personal shopping. High-end concierge services can secure reservations at fully booked restaurants, tickets to sold-out events, and access to exclusive experiences. They have relationships and insider access that individual wealth alone can't provide. Travel concierge services go beyond booking flights and hotels. They arrange private jet charters, luxury accommodations, and unique experiences like private museum tours or meetings with local experts. The time savings and unique access justify the costs for busy, wealthy individuals. Personal services like household management, personal shopping, and lifestyle coordination free up time for wealth-building activities. The wealthy understand that time is their most valuable asset and pay others to handle routine tasks. The eighth tool is using insurance strategically for wealth building and protection, not just risk management. Whole life insurance and universal life insurance can serve as tax-advantaged savings vehicles with unique benefits. The infinite banking concept uses whole life insurance as a personal banking system. You can borrow against the cash value at favorable rates while the policy continues earning dividends. This creates a source of capital that doesn't require credit checks or bank approval. Life insurance also provides estate planning benefits. Death benefits pass to beneficiaries tax-free, and proper structuring can remove assets from your taxable estate. This is particularly valuable for business owners and real estate investors with illiquid assets. Captive insurance companies allow business owners to self-insure certain risks while creating tax deductions and investment opportunities. This advanced strategy requires significant business income but can provide substantial tax and wealth-building benefits. The ninth tool is international banking and geographic diversification of assets. This isn't about hiding money offshore, it's about reducing concentration risk and accessing global opportunities. International banks often offer higher interest rates, different investment options, and currency diversification. They also provide political and economic diversification in case of domestic instability or policy changes. Foreign real estate can provide portfolio diversification and potential residency options. Many countries offer residency or citizenship programs for real estate investors, providing geographic flexibility and additional passport options. International business structures can provide tax optimization and operational benefits for global businesses. Many successful entrepreneurs establish holding companies in favorable jurisdictions, while maintaining operational businesses domestically. The 10th tool is access to sophisticated technology and data that provides investment and business advantages. Wealthy individuals and institutions use advanced analytics, artificial intelligence, and proprietary research to make better decisions. Alternative data sources provide insights not available through traditional research. Satellite imagery, social media sentiment, credit card transaction data, and other non-traditional sources can predict market movements and business performance. High-frequency trading systems and algorithmic investment strategies can capture market inefficiencies that manual trading cannot. While individual access is limited, understanding these tools helps explain market dynamics and investment performance differences. Private research and analysis from boutique firms often provides better insights than publicly available research. Wealthy investors pay for exclusive research and direct access to analysts and experts. Now that you understand these tools, here's how to start building your own wealth arsenal. You don't need millions to begin. You need the right mindset and strategic approach. Start by establishing relationships with better financial institutions. Research community banks and credit unions that offer private banking services at lower minimums. Look for institutions that focus on business owners and investors rather than just consumers. Create basic legal structures for asset protection. Establish an LLC for business activities or real estate investments. Consider a revocable trust for estate planning and privacy. These structures cost a few $1,000s but provide significant benefits. Begin accessing alternative investments through platforms that accept smaller minimums. Start with real estate crowdfunding, peer-to-peer lending, or alternative investment platforms. Allocate 10 to 20% of your portfolio to alternatives as you learn and grow. Optimize your tax situation by maximizing business deductions, retirement account contributions, and strategic timing of income and expenses. Consider working with a CPA who specializes in tax optimization rather than just tax preparation. Build your financial team gradually. Start with a good accountant and attorney, then add investment advisors and insurance specialists as your wealth grows. Look for professionals who work with clients at your target wealth level, not just your current level. The most important tool is changing how you think about money and wealth building. The wealthy think in terms of assets, cash flow, and systems rather than just income and expenses. Focus on building assets that generate passive income rather than just increasing your salary. Real estate, businesses, and investments can provide income that doesn't require trading time for money. Think long-term and systematically rather than looking for quick wins. Wealth building is a process that compounds over time. The tools and strategies I've shared work best when implemented consistently over years and decades. Invest in your financial education continuously. Read books, attend seminars, and learn from successful investors and entrepreneurs. The wealthy never stop learning and adapting their strategies. Network with other wealth builders and successful individuals. Your network determines your net worth because opportunities often come through relationships rather than public markets. These 10 tools represent just the beginning of what's possible when you understand how the wealthy really operate. The key is starting where you are with what you have while building toward more sophisticated strategies. Remember that the wealthy didn't start with access to all these tools. They built their wealth systematically and gained access to better tools as their wealth grew. You can follow the same path by implementing these strategies at your current level and scaling up over time. The most important step is taking action. Knowledge without implementation is worthless. Choose 1 or 2 strategies from this video and begin implementing them this week. As you see results, add more tools to your wealth-building arsenal. Your financial future depends on the decisions you make today. The wealthy understand this and act accordingly. Now you have the knowledge to do the same. Start building your wealth with the tools of the rich, and create the financial freedom you deserve. If this video opened your eyes to how the wealthy really operate, subscribe for more insider strategies and wealth-building secrets. Your journey to financial independence starts with understanding the game the wealthy play, and now you know the rules.